Hello traders and welcome to another video review. Today is Monday, February 5th, 2024. Let's find out what's going on the economic calendar at the beginning of the new trading week. So what do we have here? Some data released overnight. Most likely we got the Japan services PMI that beats the expectations. As you can see, 53.1 point. Trade balance from the Australia is getting bigger, 10.9 billion dollars. Chinese data were a little bit worse than expected. Services PMI from the China were released at the level of 52.7 points, which is less than 53 forecast and less than the previous reading of 52.9. The other data include the German trade balance, which is widening to 22.2 billion euro. CPI data from Turkey. Right now CPI is almost it's 64.86% overall and 6.7 in the yearly point of view. Now we got some data, of course, all day from the Eurozone regarding the services PMI, Composite PMI. So we got data from Spain, Italy, France, Germany, the whole Eurozone. This data is scheduled at 10 o'clock. And then we got data, of course, of the Composite and Services PMI from the UK. During the New York session, we got the S&P Global Services PMI, Composite PMI data scheduled for release Q4. At 4 o'clock, we got ISM non-manufacturing employment and, of course, the ISM non-manufacturing PMI. The last two speeches will come from the Bank of England MPC member Peel. He will give a speech at 6:30, and FOMC member Bostic will give a speech at 8 p.m. As we remember, last Friday the NFP payrolls beats the expectations overall, so the US dollar improved across the board. Let's find out whether this sentiment is still on during the early Monday open. So, as I said, NFP Friday gives this kind of a bearish engulfing pattern, big sell-off after the kind of a bounce from the lows, from the weekly lows on the euro dollar. And as you can see, we've made a local low at the level of 1.0768, which is just below this lower channel line. It used to be ending diagonal, but it looks like it won't be the ending diagonal anymore. It will be much it's much more probable that this pattern will be basically some sort of the down sloping pattern, not necessarily falling wedge. It might be some sort of the extension pattern, for example, of the downtrend, of course, right? So supports 1.0768, that's the support. The other one is here 1.0778, so it's roughly not even 10 pips here of the very weak support. Why weak? Because this support is below 50 and 100 periods moving average, and the market is right now getting closer to the key technical support, 1.0740 to 1.0724. so this is almost 15 pips of the technical support. In the middle we got 61% of the Fibonacci retracement of the last wave to the upside at 1.0735, so it's a very important Fibonacci level. If we zoom out strongly, you will be able to see it. So this is it, the whole movement from the lows. There's the Fibonacci level. Whether this will act strongly, we will see. So that's not entirely up for us, but it looks like this this movement to the downside is now getting stronger and stronger. However, the downside movement still doesn't look that much impulsive, because we can clearly see the impulsive wave on the chart. There was some kind of an impulsive wave, there was some kind of a corrective wave, there might be some impulse, there might be some sort of the correction, and this is why we thought maybe this pattern here will be ending diagonal, so the market can resume the up move. Nevertheless, nothing like this is happening right now, so for now we just need to watch the market very strongly, stay focused, because it looks like this market is trying to do something else right now. Nevertheless, we got the main demand zone, 2 levels of the support. If this one is violated, and then there's still some room to the upside towards 50 and 100 periods moving average. Momentum is negative because it reversed very sharply from the level of 63 points after the NFP data were published. Right now we are hovering around the level of 37 points. There is still room to the downside on the RSI before we will hit the extremely oversold conditions. There is still a room to the downside here before we will hit the key technical support zone. So overall, the outlook looks more negative for the euro dollar right now. And if outlook looks negative for the euro dollar, how does it look for the US dollar index? And as you can see on the US dollar index, the situation is obviously completely different. Strong momentum, 63 points into the positive territory, and the big spike to the upside from the lows of 102.87. The local high was made 104.16, just below the technical resistance at 1.0422. So it's like a 10 pips just below this technical resistance. Why it is technical resistance? Take a look here. This is the area that's the level that was tested 3 times already. It was tested here as well. So on the 4-hour chart, any breakout higher would open the road towards the higher levels straight on, even away from the above the level of 105. Of course, the highs of the 2023, for example, like 107.36, are now not exactly taken into the consideration. Right now, we just talk about the continuation of the up move after this period of the horizontal trend on the US dollar index has been terminated. So we got very nice impulsive movement to the upside, consolidation, another movement to the upside should be done soon. So this is how the US dollar index looks like. Let me just continue with the measures because of the NFP payrolls last Friday. Let me just take a look at the US dollar to Japanese yen, and there is the same situation here. We have a very strong movement to the upside. Momentum is strong as well, 65 points almost. We hit the last week's high. So let me just point this out. This is the last week's high on the US dollar to Japanese yen. We hit it, but some kind of a gravestone doji was made here after the level of 148.82 was hit. So it looks like the market might consolidate a little bit here and then resume the up move, because momentum is still strong and positive. So the local technical support 148.32. So the market is now locked between those two levels. So if we just zoom in and make it a little bit bigger, we all know that we need a strong breakout above the 148.83 to continue the up movement. Only basically the breakout below 146.02, 145.91 would invalidate this bullish outlook and make the nearest outlook way bearish and negative. So after this local high 148.83 is violated, next target is roughly around 149.7176. This is the area of the consolidation in the late November 2023. Alright, so it still looks very impulsive, very nice movement to the upside. The local trend line has been violated as well. We are trading above 50 and 100 periods moving average. Momentum is strong. It looks like the market wants to continue this up move higher, and those levels might be the first target for the market participants. Okay, so that was the US dollar to Japanese yen. Any other US dollar related market that might be? Let's take a look at the gold at the end, because that might have there might be consequences of the Fed interest rate decision. So as you can see, let me just extend this trend line, the orange one. There you go. Something like here is something like that is okay. So there is no breakout to the upside. False breakout here, close below the blue line. If you haven't seen my blue line from the previous analysis, this is the internal blue line here, which is acting pretty cool right now. So the market recognized this line. Market knows that there is this resistance line, trend line, which is acting as the resistance line. We have the movement to the downside, obviously after the NFP payrolls data were published. Okay, that's exactly, I just moved my line just a little bit. Nevertheless, the point is that we reversed lower, and now we are approaching the orange trend line. Okay, let me just zoom out once again. We are approaching the orange trend line. Any breakout below the orange trend line would likely get us towards 2008 technical support, very weak, and 2001 technical support, rather weak as well, only tested once. Okay, so then sorry, 2001 is here, so it's not even tested even one time. So any breakout below 2001 can get us out, of course, of the range, and we can get even towards 1972, which will be the lowest level since the December 13, 2023. So that's a kind of a important level whatsoever. Please watch this current market movements, because we broke already below the level of 50 on the RSI. We tested the level of 50 already. Now we are moving lower. So the bearish pressure is getting stronger. And because this is gold to US dollar, we can have another evidence or clue that the US dollar is getting stronger all across the board, getting all of these other assets weaker. Euro dollar, gold, S&P 500, US dollar to Japanese yen, all of these markets are related to the US dollar index and the US dollar in general. So please keep an eye on the current developments. Maybe some kind of a longer term trend will be triggered very, very soon. That's everything from me for today. Thank you very much for watching this analysis. I hope you like it. See you guys next time. Take care. Bye bye.